Hey, this is Sasha. Thanks for joining me in today's video. And today what I want to do is share with you how verticals can be an investing game changer for a lot of people when they just learn to buy stock and then they sell the stock later on, or they just purchase shares of stock. That's already a pretty big deal. But when you start getting into the world of options, learning to trade verticals can be a game changer. And it's really beyond even just selling puts or selling covered calls against your stock. It's even way beyond that. See, what happens is that a lot of people, they get into a directional thinking, but when it comes to verticals, you can actually start getting into some non-directional trading. All right, so one of the reasons we're doing this is because we've got an upcoming course. This is known as the options verticals course that we've got going on. You can check out our website at rise2learn.com. Just scroll down and then you'll see the verticals right here, mastery course. Check that out. This course is about 18 hours long right now, and you can get a discount if you purchase it during the sale and promotion. We've got 42 videos, and there's a ton of trading tutorials and education, from the basics of trading verticals to the business of trading vertical spreads, puts, calls, premiums, how does a stock move, how healthy is it, introduction of vertical spreads, and much more. And then we've got different strategies, trading and buying vertical spreads, buying out of the money vertical spreads, selling vertical spreads, protected vertical spreads, short duration verticals, risk arrays, and much more. So there's a ton of content. Definitely check it out at our website at rise2learn.com. Okay, so here's the big game changer that comes down to trading vertical spreads. See, what a lot of people do when they go in and they buy a stock, let's say we're buying shares of Apple. So we buy 500 shares of Apple. Well, in this case, here's what I did. I bought 500 shares of Apple. Okay, this is paper account, but still, you bought some shares of Apple, and then you either make money as it goes down or up, right? In this case, we need it to go up, and it went down. So we're down about $4,000. Okay, so that's a problem. So I need it to go up. I need some form of direction or movement. Now, I could go in and sell something against it. So let's say I buy Apple. You might be doing covered calls or something like that. Okay, so you buy some shares of Apple. Let's do it this way. Let's hide the positions. Bought 500 shares of Apple. And then you could say, hey, well, I'll sell a covered call against it. So you might say, okay, I'll go to 25 days out. I'll sell a covered call over here. And then I will go and collect some premium, and I can sell 5 of them because I have 5 contracts. Really, you could even sell more if you wanted to, but that's beyond the scope of the basics video. So now I've sold some covered calls against it, and now, okay, well, I make some premium, but again, if it goes down, I don't make any, I'm still losing money. I make some money from my call, but I'm still losing money. If it goes up, then I make money, but I'm directionally tied now. Now, when it comes to looking at verticals now, verticals are quite a bit different. Verticals now are something like this. I could go in and sell something out of the money. So I sell an option contract over here, sell it for $205 or $205, and then I could buy another one over here for $149. So the difference would that be my premium that I make. So I could sell this one and maybe buy this one, let's say. So I make 60 bucks. Okay, so now here's my vertical. So now if that stock stands still or goes up or pulls back slightly, I still make my 60 bucks. Okay, take a look here, zoom in. You see here at this bottom lower left corner, you could see there's 60 bucks. That's at expiration. Every day it stands still, I make about $1. Okay, $1 a day. So with time, as this time picture, let's switch this to fixed. As this time picture moves forward, that white line, which is today, gets closer to the green line, and therefore the profit increases. Okay, so that's the cool part about verticals. It could actually stand still. Now, I could do a vertical here. This is the put side. Okay, but I could also do a vertical on the call side. So I could do a similar vertical over here. Let's say I do something over at 146 and 150, or 149, I guess here. And now we've got ourselves, this is an iron condor, but I've got really 2 verticals. So now I'm not worried or concerned about the stock going up or down. I'm just collecting my theta or time premium. And this is the power behind doing verticals, is that now you're able to do non-directional trading. Once you learn verticals, you're not worried about stock movement. You're not worried about it going up. You're not as worried about it going down. You are worried about it more being contained in the range, but you're less worried about it than maybe a long-term investor where you're thinking, hey, well, I need it to go up to profit. In this case, you just need it to kind of sit in this zone and you'll be okay. So with time, after a little while, that theta or time decay starts to kind of kick in, and then you could go ahead and let's say it moves over in this area. You could take it off for 225. If it goes over here, you take off for $100 profit. Okay, all on the risk of about $1,740. But the point is that it could move down, it could move up, and you take it off. Now, would it be nice to be kind of right here and let it expire? Sure, it would be nice, but that's not always the case. It doesn't always hold these price levels. So my point here is that once you understand this concept and you're able to do something with vertical spreads, you're able to then do non-directional trading. You're able to then do a vertical spread over here, okay, right here. That's selling the put side. I'm also able to sell the call side over here. And now together, I have a total game changer compared to just trading stock or stock and a call. Or selling a put, a cash secured put, because now this can actually be almost non-directional. Now you could do slight direction. I could lean it a little bit more bullish if I wanted to. And now I can see, hey, well, I've got 18 puts here and 10 on the call side, but I could slowly start leaning it if the market's heading higher, lean it one way or the other. So my point here is that as you learn vertical spreads, you're able to really start taking trading to a whole different game. And that's what we cover in the course quite a bit as far as learning and understanding verticals. So that way you could ramp things up in the future. So definitely check that out. It's on the website. It's also in the link in the description below. So I highly encourage you to always keep learning. Check that out in that description, and you'll be able to see what this course is all about. And there's a good video right there that shows you all the different modules in there. But anyway, that's the power behind verticals, is that now you can really be flexible to your trading, create hybrid strategies, and do much more. So hope you join me in the course. A link is going to be in the description there. Definitely check it out and learn to start trading a little bit differently, a little bit better, expand your knowledge base, and start seeing how verticals play in the game of trading and investing. And that way you're not tied to any one specific direction of the market. You can now later do non-directional trading and with time continue to grow, because verticals are a good baseline and foundation to even doing iron condors, butterflies, and many other things. So thank you so much for joining me. Hope you check out that course, and also check out our website for a lot of great freebies, tutorials, downloads, PDFs, and much more. So I'll see you there, maybe in the course. If not, check out some of the freebies on our website. You can also visit tradersfly.com. And there's a lot of great downloads there as well. All right, thanks, and I will see you next time.